Hello and welcome to Stocksees. In today's video, we'll take an in-depth look at the world's largest online company, Amazon. We'll explore what's happening with its finances, how the company has been performing recently, the key reasons investors might consider it, and the major risks to watch out for. We'll also review what analysts are saying and share our own conclusion before asking for your opinion. The message of this video is clear. Amazon has been a giant in both e-commerce and cloud computing, but it's now at a critical turning point. The next phase will determine whether it continues to grow or starts to lose ground. So, is now the right time to invest in Amazon? Let's find out together. Let's get started. Let's start with Amazon's financials. For 2024, Amazon reported revenue of around $638 billion, an increase of about 11% compared to 2023. In the most recent quarter, the company brought in $167.7 billion, up 13% from the same period last year. Amazon Web Services, AWS, continued to be a key growth driver, with revenue rising 17.5% year-over-year to roughly $30.9 billion. However, there was a notable decline in free cash flow, which dropped to $18.2 billion, down from $53 billion a year earlier. Earnings per share over the last 12 months came in at $6.56. While these results are strong overall, Amazon's stock has remained relatively flat in 2025 and has actually lagged behind the Nasdaq 100 index. This suggests that investors might be expecting a bit more from the e-commerce giant. Amazon has continued to rise, but not at the same pace it once did. Over the past 5 years, the stock has delivered a return of about 43.8%, which is noticeably lower than many other tech giants that have surged during the same period. At the same time, Amazon appears to be losing some ground in the cloud market to strong competitors like Microsoft and Google. Earnings announcements have also brought increased volatility. On average, the stock moves around 4% to 5% after each report, showing just how sensitive investors are to every detail. In short, Amazon is still growing, but the margins for error are getting slimmer. Let's take a look at Amazon's stock performance from the very beginning. Amazon went public on May 15, 1997, and since then, its stock has shown truly remarkable growth. For instance, back in 1998, the stock soared by almost 980%, turning many early investors into millionaires. In those early years, Amazon was still a relatively small company, and every new product launch or expansion could send the stock price sharply higher. However, its journey hasn't always been upward. There have been challenging years as well. For example, in 2022, Amazon's stock dropped by about 50%. That decline was driven by several factors: rising competition, heavy spending on expansion and logistics, and broader economic pressures. These periods have shown that even a powerhouse like Amazon isn't immune to external challenges and internal risks. Right now, Amazon's stock is trading at around $240 per share, while the average analyst price target sits at roughly $266. That points to a potential upside of about 15% to 20%, suggesting that expectations for the company remain strong. However, it also highlights an important reality. The era of easy, rapid growth is likely behind Amazon. From here on, progress may be steadier and more measured, driven by efficiency, innovation, and long-term strategy rather than explosive expansion. So, why should anyone consider buying Amazon? First, the company remains a global leader in both e-commerce and cloud computing. Its strong presence in areas like advertising, subscriptions, and logistics provides solid diversification and long-term stability. Second, Amazon's 13% revenue growth in the last quarter is particularly impressive, especially for a company of its size. Third, Amazon is investing heavily in artificial intelligence and robotics, aiming to stay ahead in the next wave of technological innovation. And finally, analysts remain optimistic. The average price target sits between $266 and $270 per share, suggesting a potential upside of 15% to 20% from current levels. If you believe in the continued growth of the cloud and digital services, Amazon represents a compelling long-term investment opportunity. But not everything is rosy. Let's talk about the risks. First, intense competition. While Amazon Web Services remains the market leader, its growth rate has slowed compared to rivals like Microsoft Azure and Google Cloud. Second, rising costs. Massive investments in logistics, data centers, and artificial intelligence are putting increasing pressure on the company's cash flow. Third, slowing growth. With Amazon already dominating many markets, maintaining high growth rates is becoming more challenging. Fourth, regulatory pressure. Governments around the world continue to scrutinize Amazon over issues related to competition, taxation, and market dominance. And finally, there's always the risk of disappointing results. In the summer of 2025, after Amazon's earnings release, the stock fell about 8% amid concerns over AWS's slowing growth, a clear sign that investor expectations are already sky-high. Most analysts remain bullish on Amazon. The average price target ranges between $262 and $266, accompanied by a strong buy recommendation. However, not all voices are equally optimistic. Justin Post from Bank of America believes Amazon's retail segment will continue to perform better than the broader market, but he also notes uncertainty in the company's cloud business. Meanwhile, Brent Thill from Jefferies described Amazon's recent results as moderate, saying the company still needs to prove it can return to faster growth. The message here is clear. Analysts remain broadly positive, but they want to see consistent improvements in margins and cash flow to sustain that optimism. In summary, Amazon remains a company with a strong foundation, leading positions across multiple industries and major opportunities ahead, particularly in artificial intelligence and cloud computing. However, it's also in a transitional phase, where the key question is whether it can sustain its growth momentum while expanding profit margins once again. So, how should investors think about Amazon today? If you believe in the next generation of technology and in Amazon's ability to stay on top, this could be a solid long-term opportunity. But if you're concerned about rising competition or stretched valuations, it might make sense to wait for a better entry point. What do you think? Is Amazon still a buy, or is the best already behind it? And now the question for you. Do you think Amazon is a value opportunity today, or has the company already priced in its entire future? Share your thoughts with us in the comments below. We'd love to hear your opinion. If you enjoyed this analysis, don't forget to like the video, subscribe to our channel, and hit the notification bell so you won't miss any of our upcoming financial videos. Thanks for watching, and see you in the next one.